There is a correlation between the Federal Reserve's monetary policy and the price action of BTC. In today's video, I'm going to be walking you through what I see inside the data for Bitcoin when it comes to the Federal Reserve's interest rates. Guys, let's roll the intro and get right down into it. Hi guys, welcome back to the channel, welcome back to another video, and today we are going to be taking a look at a bit of a zoomed out view for BTC, reviewing kind of where Bitcoin currently is in relation to the Federal Reserve's monetary policy. If I get into this video and you do happen to find it useful and informative, smash the like button. I appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, and you'll stay up to date with everything that we do here at Cheeky Crypto. So let's jump right down into this video then. So we've got these green lines on the chart, right? These vertical lines. These are the BTC halving events, right? So we can see one here on the 1st of November 2012. We've got one over here in July of 2016. We've got May 2020, and of course the next one is actually April 20th, 2024. And so what else have we got on here? We've got the Bitcoin price action, and then at the bottom here we've got the orange line. This is the Federal Reserve's monetary policy in terms of interest rates, so where the interest rates are in the US. Now, when we take a look at these things on this chart without any other noise, without any other indicators, we can see some pretty interesting things. Okay, now we have to understand a couple of fundamental basics here. Bitcoin is relatively young. Okay, it doesn't have a lot of history, specifically when it comes to trying to reflect on where price action has been in relation to the Federal Reserve's interest rates, because well, this only really goes from 2011 to current, right? And we haven't really got a huge amount of history here, but it gives us a bit of an idea based on what we've already seen as to kind of where things currently sit. And there's a few very interesting things that I want to talk about when it comes to the price action of Bitcoin in relation to the interest rates. So let's start over back in 2012 or 2011 into 2012 and 13 highs. We had a bull run here, and this bull market was pretty significant, right? We saw a significant surge to the upside. It was around 51,000%. And during this time, the Federal Reserve had basically no increases, no decreases. It was basically a very, very, very long pause on interest rates. This is basically coming out of the 2008 financial crisis, right? And so the market was able to kind of move up quite nicely and very healthily because there wasn't really a lot of impact from the Federal Reserve's monetary policy. Obviously, the markets were absolutely destroyed in 2008, 2009. There was a lot of pain in the world and lots of people losing their jobs and all that kind of stuff. And there wasn't a lot of liquidity to kind of come into the markets. Nonetheless, Bitcoin was created, and we did see a 51,000% run to the upside, and the monetary policy was flat, 0%, right? Then, of course, we go into a bearish market after such significant gains. Again, the monetary policy has no impact on this because, again, it stays flat whilst that price corrects down. Okay, then we get into that next kind of bullish market from the lows of January 2015 up to the highs. Okay, let me actually go and pin that in there. Up to the highs of December 2017. This was a 12,000% run. Now, during this moment to the upside, what was actually going on? Well, there were some stints here with a little increase in monetary policy interest rates up to 1%. And then another really long pause, pausing from December 2015 to November of 2016, which basically is the initial surge to the upside here. Then when when the interest rates started to increase again, there was a couple of pauses on this journey to the upside. So there's a little bump to the upside on the interest rate, and then a little bit of a pause, right? And again, there was a couple of months where there was a move to the upside and then a pause, a move to the upside, then a pause. pause. And this allowed the price action to continue this run to the upside, even though there were these little increments in terms of interest rates actually increasing. Once we peaked out, we actually saw month-on-month increases for a little bit when it came to the interest rates, and we continued to climb up until we reached this 3% interest rate up here in December of 2018. Okay, and then there was a pause. Okay, so basically, as monetary policy was starting to kind of come into effect, and we started to see interest rates increasing, during this increase, specifically when they started to get more frequent, we saw a drop in the price action. And then when we started to see the pause, okay, the Federal Reserve not making any changes, this is when we started to see a run to the upside. Okay, so basically when the Federal Reserve are kind of, not really doing anything, they're just kind of sitting back waiting to see how things are going to react, that's where the markets actually tend to be more buoyant. They actually start to react positively when the Federal Reserve are doing nothing. And then, of course, we start to see a decrease in the interest rates, right? So after this several-month pause, which actually goes from December 2018 to June 2019, so a good 6 months pause, they then actually start to decrease the interest rates. And this initial decrease actually spooked the market here. And you can see that we actually saw a decrease in price action as the interest rates decreased. So did price action. Okay, and then there was another pause. This pause goes from October 2019 to February 2020. And again, you can see a small bump in the price action during this moment. But it's at this point that Federal Reserve completely cut their interest rates, doing a full pivot and a significant drop on interest rates. It's when this happens, you actually see a very significant and sharp decline in price action. So far, what do we see? Well, here we can see that when the Federal Reserve do have zero change to their monetary policy or their interest rates, we actually see the markets reacting very positively. A lot of liquidity seems to come into Bitcoin here, and it continues to run to the upside. During interest rate increases, we actually see price usually decreasing. There are, of course, a couple of exceptions to this. Okay, we are finding that there's pauses. If there's an increase and then a pause, you actually find that there's a small correction followed by a bump to the upside. And so in 2017, we actually saw the Federal Reserve do a fair amount of pausing whilst at the same time trying to increase those interest rates over a long period. So what we saw was little mini corrections of around kind of 40% in 2017, which actually ties in nicely with the Federal Reserve's increase in interest rates. But they were followed by a pause for a couple of months, which actually then created a bump in the market back to the upside, correcting after you saw about a 30 to 40% correction in the market. Okay, so far towards the end of March 2020, what have we seen? Well, we've seen that the market is very correlated to the interest rates in the US. Essentially, if the US does no monetary changes, as in it keeps the interest rates the same, whether that's low or high, then basically the market reacts positively and goes to the upside. And if the monetary policy or the interest rates are to increase, well, we see the market reacting negatively. And at the same time, if we see a sharp decline in the interest rates, we also see the market react badly. So we can see just from basically 2011 until 2020 that the market has very much been that whether interest rates go up, it will react negatively. If interest rates go down, it will react negatively. What they seem to like, the market seems to like stagnant interest rates. It wants a sustained period of time where we actually have no changes to the interest rates. That seems to be when the market actually is more green and a lot more liquidity seems to flow on in. This is then compounded again down by May 2020 when we actually have a long period of zero interest rates and basically a long period of time when no interest rates are changing. Basically from March 2020 all the way through to February 2022, what do we see? Well, we can see here that the market was incredibly buoyant. We actually had a really good run of about 1,400 585%. Okay, so during this whole moment of no interest rate changes, we see a significant surge to the upside. Now, since we started to increase our interest rates, we actually saw a very big drop in the Bitcoin price action. Again, 2020 was the year where we saw a pretty significant drop to the downside. And we actually kind of bottomed out in December of 2022, right? And what happens here is we have pauses followed by little moves to the upside on the interest rates, right? All the way through until July of 2023. Now, in this initial surge, we do have lots of mini kind of corrections, right? We kind of see moves to the upside, moves to the downside, and they correlate with those little tiny 0.25 movements of the interest rates. But most recently, we've seen the Federal Reserve do no action whatsoever. The Federal Reserve have basically just been kind of sitting on the sidelines waiting, and they've been kind of not really reacting to the market since July 2023. And what have we seen since? Well, we've seen a very nice surge to the upside. The question that I have, though, guys, is how long will it be before these guys, the Federal Reserve, actually decide to make changes to their monetary policy and actually decrease or increase their interest rates? Either way, according to Bitcoin's history here, we are likely to see a significant drop in the BTC price action. The only way that we're going to potentially prevent a significant reduction in price is going to be if we actually have small incremental changes to the interest rates over a long sustained period, as in we drop, let's say 0.25, we pause for a couple of months, we drop another 0.25, we pause for a couple of months, we drop 0.25, we pause for a few months, and they drag it out. Alternatively, they rip the band-aid off like they did in 2020, and you basically reduce your interest rates very sharply, and as a result, you'll see a very quick flash crash in the market, followed by a phenomenal surge to the upside, provided that the interest rates, wherever they may land, actually stay stagnant and the Federal Reserve do not continue to alter and change those interest rates month on month. But I thought this was an interesting kind of point of view to kind of reflect on where the monetary policy in the US has a correlation to the BTC price action. Guys, I'm going to leave the video right there. Let me know in the comments down below what you thought of this video. And why don't you check out this video on the screen right now to keep up to date with more of what is going on in the crypto space.